Everyone's saying this Solana news is insanely bullish. But here's the twist, the very same players behind the $1 billion headline may not be buying, they might actually be cashing out. And if that's true, the game changes completely. Because on the surface, it looks like Wall Street is about to pour billions into Solana. But when you dig deeper, the truth is very different, and it could flip the entire Solana narrative upside down. Let's start with the headlines. Galaxy Digital, Pantera, and other big firms announced that they're raising more than $1 billion for Solana treasuries. On paper, that sounds like massive new money flooding into Solana. No wonder social media is buzzing, bullish posts, hype accounts, and influencers calling it the beginning of a new era for Sol. But here's what almost no one is telling you. Most of this so-called $1 billion isn't fresh cash at all. It's locked tokens that these firms already bought, and they're just moving them into new vehicles. So the question is, are these treasury companies really about supporting Solana's future, or are they a clever way for insiders to get liquidity while retail investors think institutions are buying big? And this isn't speculation, the paper trail tells a very different story. Here's the backstory. After FTX collapsed, Galaxy Digital and Pantera scooped up huge amounts of Solana tokens from the bankruptcy estate. But these weren't liquid tokens. They were locked, with long vesting schedules stretching into 2025, 2026, and beyond. Now fast forward. Those same firms are announcing new treasury companies for Solana. But dig into the fine print, out of the $1 billion headline, only a fraction, maybe 300 to 500 million, is real cash. The rest? It's those same locked tokens, just repackaged. By moving their holdings into these treasuries, they get something powerful, liquid shares they can sell immediately, even though the tokens themselves remain locked. In other words, they've turned locked bags into liquidity, and the headlines make it sound like bullish inflows. So what does that mean for Solana holders? If insiders are finding ways to cash out, who's really left holding the risk? And this isn't just about one or two firms, there's a bigger network at play here. Galaxy and Pantera aren't alone. Multicoin Capital and Jump Trading are also tied to these treasury vehicles. The same players who were early Solana backers, and who hold huge amounts of tokens, now have a way to manage their unlocks without crushing the market. Think about it, if they dump tokens directly, prices would collapse. But if they park them in a treasury company and spin it as institutional inflows, sentiment stays bullish. And retail keeps buying. It's genius from their perspective. But for you, the retail investor, it creates a dangerous illusion. You see billions of demand that isn't really new money. So the real question is, if insiders are engineering liquidity for themselves, does that mean Solana's growth story is fake? Not exactly. And here's where it gets really interesting. Here's the nuance. Even if these treasuries are partly a financial trick, it doesn't mean Solana is weak. In fact, it proves the opposite. The tech is strong enough, the ecosystem is big enough, and the brand is powerful enough that major funds want exposure. Yes, insiders are creating liquidity for themselves. But that also locks Solana deeper into the institutional game. These treasury vehicles aren't going to sell off immediately, their job is to hold. And as long as the Solana narrative stays alive, retail interest keeps flowing. So the bullish case is still intact, just not for the reasons the headlines suggest. Here's the bottom line, the $1 billion Solana news is not what it looks like. It's not pure inflows. It's not free rocket fuel. It's insiders securing liquidity while everyone else thinks new buyers are coming in. That makes Solana riskier than the headlines admit, but it also shows just how central Solana has become to crypto's next chapter. If demand stays strong, Sol could still push towards $700 this cycle. But if sentiment cracks and insiders quietly exit, latecomers could be the ones left holding the bag. So here's my question for you. Does this news make you more bullish on Solana, or do you see it as a giant red flag? Drop your thoughts in the comments, because I want to hear where you stand. And if you found this breakdown helpful, smash the like button, subscribe for more no BS crypto analysis, and don't get fooled by the headlines. Because in crypto, the real story is almost never the one they want you to believe.